Good afternoon, everyone. My name is Jen Hicks. I'm the Director of Communications and Outreach with Maine Woodland Owners. I'm also the editor of our newsletter, Maine Woodlands. And I'm also the person who works with our membership, and I do a lot of these programs that you see either on our webinars or in the field. I find terrific people to lead programs to discuss topics of deep interest among woodland owners. Maine Woodland Owners is a nonprofit organization. We're membership based, and we are the only statewide organization that provides resources and advice to Maine's small woodland owners, people who own between 10 and 1,000 acres. We love having anybody who wants to be a member. You don't have to own woods to be a member. And if you're not a member, I'd encourage you to visit our website, mainewoodlandowners.org, and click on membership. And for $50 a year, you get a monthly newsletter and all the benefits, including getting updates from us and learning about our programs first. So, and also you can always give us a call and get some advice from us as well. And we're connected to some terrific people, just such as Jim Norris here. And Jim's been a member of our organization for decades. And as part of his professional life, he was a unique, I would call him a unicorn. He was a licensed forester who worked for the IRS. And so he really knows what it means to understand your tax considerations when you are generating revenue from your woods. And he also understands how to manage woods. He actually owns his own, he has a wood lot. And I believe you sold Christmas trees at one time, Jim. Is that right?
I did.
So you had a couple different revenue sources, and it turned out to work very well for your family. And now you are retired, but you're still available and working with us on these topics. So really appreciate having you today. And Jim's going to go through a lot of concepts and ideas around this topic.
Can be a little louder.
And I'm going to mute people as I hear you. I'm going to try to keep everybody muted. So if you have your mute not on, please turn your mute on now, so we have good audio quality. Okay. So the way it will work today is, because there's so many of you, I would recommend that you send a message in your chat to Jim as things come up. But I would also, Jim, do you have a recommendation of how people can ask questions or make a comment? Do you want them to just use their virtual
Raise the hand, I guess.
Yep. And then unmute yourself and ask your question is probably your best bet. You may want to say that you're going to present a certain amount, and then you can stop and ask for questions as you go along. But however you want to work it, it's fine with us.
Well, we can try and see how it works with, raising your hand if you really feel it's significant to address that at the time. But we'll play it by ear. Got a
I'm
good
going to
group.
also, Jim, here's what I'm going to do as well. I'm going to put your email address in your next to your name.
Yep.
And then folks can email Jim as well. So after this program, you have some questions, or if you have a longer question that you wanted to ask offline, you can email him that question as well. So I'll make that change on his screen so you can see his email address. Did I forget anything, or are you all set with?
I think I'm all set. I just wanted to let people know I'll be sharing my screen multiple times with a PowerPoint and several spreadsheets and a Word document. So you won't see this ugly face too much.
Okay, that's fine. I guess that's okay. Well, thanks again, Jim, for doing this. And I hope everyone gets a lot out of this. This is being recorded. It's going to be posted on our YouTube channel, Maine Woodland Owners YouTube channel, and I'll let everybody know where to find it. So if you may want to revisit some of these concepts and parts of this presentation, and you'll have that chance with this recording.
Jen, I hope that you would kind of hang on for 5 or 10 minutes to make
Sure.
sure we're
Yep.
underway. Okay. Thanks, Jen. Um, as Jen said, I'm Jim Norris. I live in Winthrop. I worked for the state of Maine in the Department of Revenue for 8 years, a long time ago. Graduated from Orono in forestry. I dealt with the tree growth tax law, valuations and administration, and went into and did appraisal work. Um, and fortunately made a move to the IRS where I had an opportunity to uh, deal with a lot of related forestry issues. There's more than just um, computing timber timber tax on sale of timber, their allocation of purchase prices, all sorts of other related issues, estate valuations involving timberland, common and undivided interests, and so forth. So, but for 32 years, I worked out of Augusta in many parts of the country, dealing with a variety of issues. It's important to note for some of you who might be, I understand that some of you are from quite a distance away. Forestry is very, very different in different parts of the country. The Northeast is dramatically different than the Southeast. We also, out west, things are very different. So terminology, prices, kinds of products uh, are, are varied, and there's some twists and turns involved in uh, completing the kind of work that's necessary. Um, Today, I also do some consulting work. You may very well need more than just some casual assistance. Since I've retired, I've had quite a host of clients, as many as 10,000 acres and down to 10 or 12 acres, generally involving people like you, small woodlot owners who may be making the first timber sale since they've owned the property, or looking to do some estate planning and want to look at how the process is going to work in changing. So the the primary purpose today, as you'll see, is really involved in how you're going to report a timber sale. Um, they take many forms, as you know. It's getting more and more diverse. Everything from stumpage sales to cutting your own to hiring somebody to manage a timber sale in part or all the way to a mill. And it has different tax implications depending on the nature of the transaction. Hopefully, a lot of you either have some forestry experience, or maybe I'm a host here, so I'm getting some signals to let people in. I apologize if I breaks up a little. Um, Having a licensed forester is in particular very helpful, and I I try to get a lot of the foresters to get actively involved in this process. Um, Sadly, they're afraid of the IRS, but and they should not be. It's Believe it or not, the IRS can be pretty reasonable with it, especially in situations like this. The IRS deals with timber tax issues on a very, very rare basis. A timber tax for small woodlot owners. We those of us who work for the IRS in foresters and engineers generally worked on large corporate forest products companies. So I'm going to share my screen here in a minute. I'm going to um, use a PowerPoint that I've used off and on over the last few years. The first part of this is going to relate to some general principles. Uh, but because, the most common issue that we have to deal with is reporting a timber sale, I may breeze through some areas a little quicker than others. And if you have other issues, feel free to make some comments. You can contact me or contact Maine Woodland owners. Um, so with that, I'm going to go ahead and share my PowerPoint. All right. I hope everybody can see it. If not, let me know. My PowerPoint experience has been limited to just this, so uh, we'll we'll move along from here. Um, it's very important to give some credit here to the U.S. Forest Service, which publishes a document uh, from their website, but it's also on the timbertax.org website. As you can see there, there's lots of information. Um, I have copied a lot of text from their publication, Ag Handbook 731. Some of it's getting slightly out of date. I hope that um, uh, it is still pertinent. There have been no major changes. Let's see. I'm flipping around here a little bit. My trigger finger is moving. Um, Depending on who you are and what kind of ownership you have, the treatment for timber tax issues could be very different. Whatever your purpose is, whether you own this for personal use uh, or investment, which most of us fall in that category, or you actually are conducting a business or attempting a business with the intention of making a profit. Uh, Personal use is pretty much as it explains here. You happen to have some forest land associated with your house lot. You're not taking any serious efforts to enhance the forest and planning on timber harvest. Investment, as I said, is generally speaking, most of us are in that category, small woodlot owners, and um, some of us don't even know it until we're, actively owning the property and realize that there's an opportunity to realize a profit from your timberland. I know when I bought my property 40 years ago, I had it. Fortunately, the seller didn't realize it was a tremendous woodlot, and it has funded many things over time. Uh, Disney World, new windows, refinancing a mortgage. So it's been a good investment, and it will continue to be a good investment, I'm sure. Uh, the other category we deal with is as a business. It's pretty difficult to be a small forest landowner and really be able to be in a successful business, so to speak, because you've clearly, from an IRS standpoint, you clearly have to show that you're doing this primarily for profit, and your activity is much more regular and than as a casual forest landowner. Um, there and the requirements to take advantage of what business statutes allow is much more difficult and stringent. Um, when there are some general cost considerations that we'll touch on a little later, but um, what are capital costs? What are deductible expenditures? What's a cost of sale? We'll get into the actual detail. What's a purchased asset? What's an inherited asset? An asset received by gift and an allocation of original basis. Several of these come into play in looking at a timber sale on your woodlot. A capital cost is a cost that generally speaking cannot be deducted from your income in the entirety when they occur. These costs can be recovered maybe over a significant period of time. And when it comes to timberland, as you might well suspect, you can own the timberland for a very long time before either you choose or the timberland is ready to be harvested. Recording that and that these kinds of costs is essentially a capitalization process. Generally, it is money spent for real property, for equipment. Each one of those gets treated different from an income tax standpoint. But they generally involve making an improvement that increases the value of real property already owned, and therefore it's a capital cost. Examples, buying land, timber, buildings, and machinery and equipment that has a useful life more than a year. In the case of timberland, may involve some bridges, roads, culverts, fire breaks, some site preparation. We don't see much tree planting in Maine, or major repairs that add to the life of some of your machinery and equipment. So purchase assets, we're going to get in. You need to realize that the original basis, important to stress the term original, is of a capital asset, i.e. timberland, is the total cost of the acquisition, including legal fees and potentially even some surveying fees or fees that the seller may have you're sharing with the seller. So it's the total establishment cost. If you inherited the property, the original basis is the fair market value. And a fair market value is the value between a willing buyer, willing seller, neither under any compulsion to buy or sell, fully knowledgeable. And it's as of the date of the decedent's death. For estate tax purposes, there is an opportunity to choose an alternate valuation date, which is generally 6 months after the date of death. Assets received by gift, generally we obviously see a lot of that with families. But the original basis is the basis, the actual cost basis that the donor has. And that could be the donor's original price, original cost, plus costs, capital costs that they incur. Um, and so and again, this rule could be very, very different from a purchased asset. And it's one of the more difficult parts of establishing your cost basis in a recent timber sale. The most difficult part of this is actually allocating the cost basis, original basis, amongst the assets that were purchased. It could include just timberland, where you have both land and timber. They recover the cost of the land when you actually sell it. The recovery of timber is done through a process that we'll talk about, but it generally involves creating some sort of depletion unit that represents your cost in a per unit basis. But it also it should be in proportion to the separate value of each at the date of purchase. And I think it's significant to point out that, lots of transactions are not really at fair market value. If you're a knowledgeable buyer and you're able to make a bargain transaction or just the opposite, you still have to determine the value of the assets, especially in relationship to each other, so that you can apply that ratio to the actual price that was paid. Becomes pretty difficult when you're dealing with, land versus timber, as you'll see in a few minutes. In the land account, obviously, when it comes to it's a capital asset. You might have non-depreciable land improvements like building roads. The rough cut and fill of building a road is a non-depreciable land and so in any improvement that you make in it subsequently, in of that nature would also be considered non-depreciable. Land does not depreciate from an income tax standpoint. Obviously, the key element here is your timber account, and it here in Maine, unlike down in the South and other places in the country, we're generally not dealing with a value for young growth or plantations. We're dealing with merchantable timber, and that merchantable timber could take many forms depending on what it's merchantable for. And as it's important to identify how much merchantable timber you have, and depending on when you acquired it, if you have an inventory or you're getting an inventory or getting some help, you might describe. Did Delbert want to say something? Okay. So you might describe pulpwood, for instance, smaller diameter wood that's likely to be used, not for dimension lumber and so forth in cords. Um, and more, almost, it's really being converted, where we're talking about uh, tons of cut timber. And for saw logs, much higher valued material, um, we're talking about 1,000 board feet. There are two cords in 1,000 board feet. There's about 2.5 tons in a cord. So we'll we'll talk a little more about that as we progress, because many times it's real important to compute this volume in a lowest common in a single identifiable process where you're converting cords to 1,000 board feet or converting either one of those 2 tons. So you'll see in some of my examples. I'm going to go through this next section fairly fast because this is issues that relate to filing a Schedule C, which is a business reporting element of a tax return. Um, Having a four-wheel drive pickup and a chainsaw doesn't necessarily qualify you as a business. Um, Trust me, the IRS has seen it a million times. Try, but there are a lot of elements to it, and it obviously requires much more active participation. It requires clearly ongoing record keeping, and a lot of the costs, they speak for themselves. Hiring people to work for you, buying tools with short-term use, uh, and many of these are not costs that small landowners generally are involved with. Um, Also, operating expenses, expenses that generally recurring. They're expenses done on a year-to-year basis. And, for many of us, you know, the only regular activity we have is paying property taxes. But, for some, as hiring a forester to regularly get out there, you start getting involved in how close a call it might be. But unlike other types of businesses, owning a woodlot doesn't mean you're getting income every year. Unless it's very substantial property. And the IRS is generally not accustomed to dealing with a business that only generates income, every 10 years. It certainly is possible, and it's a challenge to make sure that they understand that how forest management works. Most IRS revenue agents have never dealt with uh, a small woodlot owner and the kinds of expenses they have. So some of these costs, you have choices to either capitalize it or try to attempt to write it off as a business. And I'm going to kind of breeze through here. And if forest management expenses that we saw earlier, for an active business, they're generally fully deductible. Um, Unless you are trying to uh, mix expenses from different businesses you have, you may have heard of passive loss rules where people have multiple businesses and they own one business on a lot, that never makes money, incurs loss, and then try to offset their gains in other businesses with with losses from an unrelated business. The IRS is a lot of experience now in dealing with that question. The forest management expenses for some of us who are small woodlot owners and an investment can be deducted if, in fact, they exceed the portion of them that exceed 2% of your adjusted gross income. That's the income that's on the bottom of the front page of a return, top of the second. Most of the time, that's pretty hard to achieve uh, for small woodlot owners. And the portion that did not exceed could be capitalized into your capital account. Um, and and used against your cost base, against the sale of the property when you do it, when you finally make a sale. Um, income income considerations, we're getting closer and closer to the element here, but you clearly have timber sale receipts, and just like with all IRS, all federal income tax, state income tax issues, receipts may be make or break you. So it's important to have them and understand them. Uh, Clearly, determining the amount of gain or loss, and the amount of gain obviously is what you received in the sale, and your cost basis is the um, cost that you have in the actual sale. Um, one important element to remember is that a cost, what's a cost of sale? Well, a cost of sale is, for us, is essentially depletion. I'm not going to get into a long-winded discussion about the difference between the two. It's only different depending on um, the nature of your property. But a cost of sale, um, would include your basis. It could include the cost of hiring a forester, so that you get from gross income to net income. And after your net income, the gross income's got to be compared to your adjusted basis in what you sold. I mean, I'm doing this fairly quick. Those of you who have, I saw a lot of gray hairs in the crowd, so I'm sure you've all filed tax returns before and dealing with selling houses and property and so forth. And hopefully a lot of you have actually sold timber. Um, Recovering your basis is recovering the basis generally in disposing standing timber. As many of you know, standing timber is many historically described as stumpage. And the fact that it's standing timber is very significant when it comes to the classification of the sale as a sale of a capital asset. So you have a capital gain where you've held the asset for more than a year. It may be more and more we're seeing situations where people are cutting their own timber. So it creates a variety of reporting situations. Reporting it, as I said, how long did you own it? When it comes to getting capital gains treatment, we're talking about holding it a year. what was the purpose for owning it? We talked earlier about um, investment versus business. How did you dispose of it? Did you sell the standing timber yourself? Did you hire a forester to do it for you? Did you hire a forester or a company to provide a service to you in marking it, having it cut, having it transported to a mill, and which we're seeing a lot more recently. Uh, Cost of sale. Um, Real important to remember this, especially if you're doing this yourself. Your forester involved in helping you with the sale doesn't necessarily spend a lot of time um, doing anything other than that, other than advising you about the future, whether it's a management plan or setting up an inventory and whatever. But as you can see, the items that I've listed here all relate to making the sale. So they can be deducted from the sales price to get to your net gain. A lot of consulting foresters will uh, charge you separately for marking and scaling timber. Um, they don't generally get involved in any advertising. If you're playing an active role in this transaction, and you have your woodlots obviously not out behind your house, you may be able to offset some of your travel costs. Um, Many of the folks that are main woodland owners and others, but have a very personal relationship with their woodlot. I swear some of these guys have named all the trees on their woodlot. They're so familiar, so involved. It's tremendous to see. But and the fees that you pay uh, for this process, whether it be 10, 15%, are used to offset the gain. You'll see where I record them in a couple examples. Um, I'm not going to get into uh, government program NRCS payments in particular, which are payments that you can secure from the federal government for capital type improvements that you may be able to exclude from your income. Um, I think that uh, given what we've advertised here, I'll just point out that there are a number of elements to it. It has to be a program that is identified um, and there's a clear formula for determining how much of that payment you can exclude from income. But if in fact you exclude it from income, you cannot claim it as a cost. That's obviously double dipping. So now we get to another, I think, a pretty significant element. I call it information returns, but all purchases of standing timber are required to file a 1099-S. That's a proceed for, in this case, a real estate transaction. And for the purposes of the IRS code, sale of timber is included in that. Now, one of the biggest problems we've had over time is that sometimes you don't get one, but more often than not, you might get a 1099 miscellaneous, which is a 1099 for services. Um, if you were doing some work for somebody and they wanted to deduct the costs they paid you, they would generally file a 1099 miscellaneous. The biggest problem is that if you get a 1099 miscellaneous, um, those are are, are statements related to ordinary income, not capital gain income. So if I just did my own return on TurboTax, and I looked a little deeper into what's there, and if when they ask for 1099s, you got to make sure that it's identified as a 1099-S if you plan on getting capital gain treatment for this sale. Otherwise, it would get taxed as ordinary income. And as you'll see in the very near future in this presentation, the tax rates are dramatically different. Um, so just remember that your 1099 from whomever you receive it, whether it's the forester um, or from a mill, should be a 1099. I'm sorry, not from the mill. From the mill might give you a 1099-S, depending on the nature of the activity. The forester uh, who might buy your timber as stumpage would give you a 1099-S. The mill would it's ordinary when the mill does it. So you'll see, I've got an example that will clarify what I just said. But sale of timber involves what the gross proceeds are from the sale. Um, once in a while, I've encountered where, if the forest is working for you and he's made an arrangement um, to file a 10, send a 1099 to you, it's important that that 1099 is for the gross proceeds, not the net proceeds, which, it might have included the forester's fees. Um, and okay, no, thought somebody was wanting to talk. Uh, I've got hold on just a second. I'm trying to determine how I can let some of these people in. uh, I've got 3 or 4 people that are uh, I'm going to when we take a break here shortly, uh, I'll deal with that, and I apologize to those people. Um, records. The kind of records you keep as a small woodlot owner certainly aren't as sophisticated and complex as the kind of records currently a business or others might have, but you can't have too much. And I, I, I would point out that even just keeping notes of what you did on the property, why you did things, you know, 15 years later, and you're trying to explain why you have a certain cost there. If you kept a diary, lots of people keep a journal, keep a diary, especially if they're trying to act as a business, but you can't do too much. And just keep it available because it might even be important to have it for estate tax purposes. Subsequent owners can get a better picture. And so you can't have too many records. As you can see here, tax rates, ordinary income rates could could vary greatly depending on how much income. But if you're in the first two tax brackets, um, and I'll show you this. A lot of you may hang up after I explain what I'm talking about, but if in fact it's a long-term capital gain in the first two brackets, the tax on the capital gain is zero. And after those first two brackets, it could be, as low as 15. So there's a substantial benefit. And, my personal view, Congress obviously felt the same, especially with timber. You did a lot. You held it for a long time. You paid taxes. You took care of it. And you deserve an income rate. It's again it's hard to compare selling stocks with selling timber. You may have only owned it just that year. A lot of us have owned as I said, I've owned my property for 40 years. Here's the key, the exclusion provisions. For 2025. So in order to get a 0% tax rate on your capital gains, if you're filing singly and your adjusted gross income, including the capital gain income, is 48,000 or less, there's no tax on it. If you're filing jointly, it's now up to 96,700. So if your adjusted gross income, including the timber sale, is less than 96,700, you pay no tax on the capital gain. But it's not a do or die situation. If your adjusted gross income was 125,000, you would get a prorated benefit of that capital gain of 96,000 divided by 125,000, say 80%. 80% of that capital gain would be taxed at zero. That's a pretty significant benefit. I think it's the IRS or Congress has basically said that it's too much trouble, or it's a fair way to do it. A lot of people I deal with on a consulting basis, or people who call, once I mention this, they may have some Social Security, a small retirement pension, maybe a smaller IRA or so forth, are pretty relieved because this timber sale, the capital gain from it is not taxable. And the tax return itself, it has a capital gain worksheet, and it has where the capital gain and ordinary gains are blended, so that when you compute the final tax rate against your income, it's a combination of a capital gain rate and an ordinary rate. So, and you don't generally see that worksheet if you're using a tax service like TurboTax and Tax Act and so forth. Um, and that's why it's real important that it get identified as a capital gain, not part of your ordinary gain. Uh, so and most, all the tax software will make that distinction for you, and they don't necessarily provide a copy of that worksheet with the materials that are provided when you complete your return. Um, and sale of stumpage is a capital gain, but if you're selling timber, um, say the um, forester buys the timber from you, or um, he in fact will pay you rather than um, a logger, for instance. But as I said earlier, what we're seeing more and more is a forester or a consulting forestry operation acting as an agent for you, providing a service. So they go out either themselves um, or generally those people may have other business ventures that they can secure, but they hire a forester, they hire a logger, they hire a trucker, and they find a market for the product and um, provide that for a fee, 15, 20%. So ultimately, you get a you get a 1099 from a mill. And then, so what are you going to do? Not all of that income you get from the mill is a capital gain. The only capital gain is the portion that relates to the sale of the standing timber, which introduces, a little more complexity into the process. I'll show you in an example here in a couple of minutes where part of your income is capital and part of it is ordinary if the transaction is as I just described. Um, Property taxes may be capitalized. Generally, a lot of small woodlot owners are able to have a home on the property and deduct that as a deductible expense on their itemized deductions. All right. I'm going to take a break. And you all can, if you need a glass of wine or a cup of coffee, maybe it's a good time to do it. But I'm going to take about a 5-minute break here. I'm going to see if I can figure out how to get some people into the presentation. I've not been in a host mode very often, so if it'll take me just a minute. So sit tight, and I'll be back in 5 minutes.
But I mean, where do we get to the 2,000? I mean, I know we paid a few of those small ones, but. Yeah. Oh, okay. Okay, yeah. I thought it was, I knew we had 2,000 on drugs, but of course that's mostly paid with your visa.
I think I just let you guys in.
Thank you.
I'm so sorry. I was juggling a few things here. I apologize. Matter of fact, if it was more general information up to this point. Okay. So I guess we can get going again. Okay, a Form T. Form T is an IRS information report form, and specifically for timber. And as you'll see, um, it relates to allocating your original cost basis and reporting a gain. It's not a routine form that a lot of tax preparers see because they don't deal with them. It's not required, but it certainly is a great information report, not only for the IRS, but for you to maintain um, your tax records, and it's can accommodate multiple years of cutting and adding costs. All right, I'm going to bring up another form. What you're seeing here is Form T. I had wanted my phone. I couldn't.
Sorry.
Yeah. This form is a Form T. I just made it on a spreadsheet. It's a facsimile, but it's pretty important. I think it adds some credibility to your reporting if you're using something that looks like an IRS form, or it actually is. The IRS forms are generally form fillable and not our. This is an actual Excel spreadsheet that I'm showing you. And if you look down here on the bottom of the return, I'm dealing with multiple years. You can deal with multiple years. You pick up 1 year where you left off the year before, and or the difference in times between sales. But I think it makes an excellent record-keeping device. And as you can see, I have changed some dates without changing the actual prices that were paid. So if anybody was real careful and you notice that, just realize it's what a point I'm trying to make. As you can see here, we're reporting the amount of the timber sale. There might have been.
I don't think we can see it.
My screen doesn't show anything.
It says that I'm sharing it.
It's blank.
Oh, hold it. How about now?
We can see it now.
Okay. I'm sorry. This is a Form T. It's an information report. It's unique to timber-related activity. Um, and it lends itself to an Excel spreadsheet, as you can see. Um, it has all the key elements that are important to reflect. And if you look down here along the bottom, it lends itself to multiple year or multiple transactions. So, 19, 20, 21. The first sheet here, this or this particular sheet, I got to go back here. This is the hold on here a second. There's an initial sheet that this I'm gonna call up a different file. I apologize. That'll there's supposed to be an opportunity for me to get back to okay, here we go. We're going back. All right, here we go. The allocation of the purchase price. I apologize for that. What we have here is this allocation as part of the process. I included identifying the timber sale itself here, the stumpage sale, so that when you complete the rest of the form, the acquisition and the reporting of the gain, all you have to do is link the individual spreadsheets. So, you can see where I've got a timber sale in 2019, 2020, and 2021. But the important part was right here. Fair market value of the purchase price for a 2009 acquisition. And so what you're doing is you're going back to 2009 to allocate the price you paid, which in this case was $34,000, between timber and land. The land, and here's probably the most difficult part. What's the bare land worth versus the timber in a price per ton? I'm sorry, in this case, it was a price per cord. I converted everything to cords. So what's bare land worth? It depends on where it is. Is it a guess? Maybe. But you can determine the value for timber. If you have a sale, you can grow that sale back or you can actually look at stumpage prices for those kinds of products, especially if you know what you have. See these timber. This is from an inventory or advice from a forester. You can go to the Maine Forest Service or get assistance and find out what those products sold for per unit back in 2009. And as you might well suspect, it's increased substantially between 2009 and a sale in 2020. Stumpage historically has grown, stumpage values 4 or 5% a year. But, during downtimes, you could actually have a loss because you purchased it in 2009, you sold it in 2020 when the market was terrible. But anyway, there are multiple ways to get what you felt the fair market value of the timber was. And if in fact you feel that's the most reliable element of determining cost of land or timber, you establish that and then might see what you have left over, divide it by the number of acres, and did it come out to 200? It didn't, but and this is where it's not perfection, but it's not letting perfect get in the way of doing it well. I mean, but when you look at those components, and you added them together, you got 37,000 in fair market value, but you only paid 34, so that you would make a further adjustment to get to your actual purchase price. So then we go to and I'm going to go to after we finish this example, I'm going to go to a more simplified, something that I've been using when people just don't have records. This is actually part one, which sets you identify who it is, where it is, and so forth. How much you paid, 34,000. What kind of expenses you had, cruising, surveying, other kinds, 30,000. So your total purchase price was 37,000. We determined earlier in that acquisition, and if you look up here, that you had, this is for land, 101 acres. We determined it was worth 200, and so we're imposing that here. We determined that we had 3,000 tons. I didn't go into a lot of detail about it. You're going to have to trust me that the allocation does get down to the number of tons that were included, and they were worth $5.77 a ton. So we add those together, we get the total cost basis. But what's really, really important, is this element, because this is what we're going to be able to recover every time we sell a ton of wood. We're going to recover $5.70 to offset the sales price of that wood. So did somebody want to say something? Okay. So then we just simply move to, this is called the depletion schedule. We started out with 3,000 cords, 3,000 tons. We had 17,000 in cost. We had growth for 10 years. I only put it at 1%. So what you originally had grew by 300 tons, but you didn't have any cost in that. So when you're starting depletion, you now have 3,300 and it changes your depletion unit down to $5 and a quarter. I put a number in here on this particular one just for description purposes. Say we sold a ton of wood. We multiply that ton times our depletion unit, and the allowable basis for sale is $5 and a quarter. So we subtract what we sold from what we had, and we subtract the unit rated depletion to get a new one. And those two become the starting point for the next year. And this can be continued. What's that? Okay. So I left the taxpayer's name on. So this is the final element of this particular means of reporting. So we have in 2019, we received $1,500, and I'm sorry, this doesn't relate direct. I should have been a little more careful. I intended to start a year later. But it just going to have to trust me a little bit here. This particular lot was 50 acres. It was purchased at that same time. They sold $1,500 worth of timber. They had 50 acres. Okay, it does relate. So we sold 1 ton, and yeah, okay. This boy, I'm embarrassed, but you'll see why. We claimed we had $5.25 per ton, which allowed us a $5 cost basis. This number obviously doesn't relate very well. They should be, probably this cost basis would generally be within, say 50 to 75% of what it sold for. I am so sorry, but in principle, we've determined the cost. We know what it sold for, and the net gain, the profit is 50, is one minus the other. And you can go from 1 year to the next using this particular format. This obviously is much more reasonable, and you go through the process for the next year and the next profit. This was far more realistic. We had an $8,000 sale. You had a cost basis of $3,700, and you had a gain here, a net gain. So I'm going to share an important element here now. A lot of my clients and a lot of people I talk with don't have a survey, don't have an inventory. They're making one sale in a lifetime. They do have records enough to show that their original purchase price did include had enough in it to cover land and timber. And so this is a real and when I do this, I explain and attach it. It's a simplified sale. It was acquired in 1985 for $100,000. This summary does not match what I was going to show you for the calculation, but so I could ensure that there was sufficient basis in timber. It was 60 acres, 49 forested, so they never made they made maybe just a minor sale in the process. There never was a purchase price allocation between land and timber. They had no timber. A lot of people don't have a timber inventory ever. It's a pretty handy thing to have if you're going to be pursuing it further or making a sale. They did make a sale, but they didn't claim any cost basis. So they only had taken $1,700 out of $100,000. They had plenty of cost basis. So I explained to the IRS through this form, this letter, that it would have cost a significant amount of money to incur the cost of a timber inventory prior to this. So in this case, a 1099-S was provided to this taxpayer by a consulting forester who happens to be right here in Winthrop. So what we're essentially doing is we compare the price of this property was purchased in 1985. So we compare the price of softwood pulp, pine saw logs, and hemlock saw logs in 1985 with the 2025 price actually paid to this owner for those same products. And as I said in this, you could end up, and we use Maine Forest Service prices, we could end up with an actual decrease in prices between those. Is it a real loss? No, it depends on when you got into the market, just like with stocks. So you then create a spreadsheet comparing the prices, the price you paid for, or you would have paid in 1985 versus in the numerator and the 2025 stumpage prices for the same species and products, and you end up with a relationship that's a percentage of the 2025 price to estimate the 1985 price you paid. This is not standard fare for most situations outside of this kind of timber scenario. And it's important to remember that you had growth between 85 and 2025 that has no cost basis and has to be recognized in the computation, which I will show you that spreadsheet. So comparing the price you actually got with the price we determined based on comparing um, less that price would get you your net capital gain. Additional costs for the making the sale, like hiring a forester, would further adjust that capital gain down. And this is, again, would be reported on a 8949 or a Schedule D with capital gains. So I wished I had been slightly better prepared in my simplified example, which I'm about to show you right here. The computation process I just described is shown here. It's not the same sale. It is the identical process. And just so you realize, I explained it here, so anybody looking at it. This particular one, you got a $45,000 sale. We compared 2011 prices with 2025 prices for pulpwood and sawlogs. And you can see that pulpwood, these ton price was very nominal. The sawlog price went up to $195. The relationship between that was 85%. So that what it's telling us is that if you have a sales price in 2025, your cost basis in using this simplified approach, I say simplified, I hope it's not too confusing to you. Your cost basis would be 85% of that. And we so that would be used to compute what the 2011 actual cost basis was, which was 38,000 versus 45. A growth adjustment, which we didn't have any costs, which was 2% of the volume per year. So we netted out with a cost basis of 36,000 compared to 45,000 and a net gain of 84. Go ahead, Renee.
We can't see what you're referring to.
Did I do that again?
It just says Part 3, 2020 profit or loss. So I don't think we're
Okay,
looking at this.
I'm sorry.
Sure, no problem. Thank you.
See it now? Is it showing now? I assume it is.
I think so. I see bigger numbers anyway than what we were looking at before. Yeah, 2024 timber sale, page 1. Yes, thank you.
Okay, what it really has done is in this particular component, I compared prices between 2011 and 2025, and I got a relationship. $7 versus $8, 166 versus 195. And the $8 and the 195 were the prices you actually got, or the prices that the Maine Forest Service provides. And I'm going to, and so the relationship was, 86%. So, I took 86% of $45,000 and got what I calculate or estimate to be a cost basis. And I had to adjust for growth because you during that period of time, you incurred growth with no cost basis. So the net cost basis was 36,000 compared to 45,000 and subtracted from 45, and this would be your gain. I deeply apologize for this spreadsheet not being the spreadsheet for the descriptive information I had earlier. I was unable to find that spreadsheet for that particular one. But the whole point was the taxpayer had little or no records relating to its original acquisition. And you had the IRS or somebody has to assume a couple of things, that you paid fair market value for it, or you inherited it and a fair market value determination was made. It also has to assume that you didn't make any significant sales during the time you owned it. And so in this particular case, it's an $8,000 gain. This is actually a little higher than a lot of them that I see in terms of what they get, 45,000. A lot of them are, 10, 20,000. So I've done this 30 or 40 times at least, and the IRS has never questioned the process because it requires them, somebody, to decide what was reasonable, and they don't do it very often. They don't see it very often, and I've run this by some IRS tax auditors, and they're acceptable. It sort of makes sense, doesn't it, that if you bought something for 36,000, and you got and you sold it for 45,000 between the period 2011 and 2025, that this would be a gain. It gives credibility to the your number. Is it perfect? Absolutely not. It stands the test, I think, of scrutiny by the IRS. I want to share something else with you. Okay, I talked about stumpage prices. This happened, I assume you can see it. It says 2024 stumpage prices, Maine Forest Service. This is a real handy way, if you're doing the approach that I just mentioned, to find prices. They have this going back to 1970 or something like that. So you can see that they do an analysis, look for prices for all kinds of products and species, and it's a neutral source. Again, is it perfect? No, but there's just very little opportunity to. Okay, James. Please unmute you got your hand raised, James, with
Okay.
There we go.
So, when you create a land account and a timber account,
Yes.
does that lower your cost base on your land?
No, I mean, the combination of those two should be the total price you paid. The difficult part is where's your most reliable data? Is it the value of land? We don't see very many uh, bare land sales. Otherwise, a clear-cut piece of forest land, because we're looking at forest land, not fields and agricultural field. So, generally speaking, we use a residual. We use whatever we can, whether it's this. I originally used to assume that an average acre would have 15 cords per acre, and I would assume that it grew a half a cord per acre per year. And so if I went back to 1985, and to get an estimate of the inventory, I could, multiply the acreage times 15 cords per acre, and then multiply that times the number of forested acres, and I would have a very rough estimate of the value of the timber. If you had current inventory, you could grow it back at a half a cord per acre per year to get that initial, what you had then, and then price it based on this kind of information, or the best you can get. And that's also assuming that you create a common denominator. If you wanted to use cords or you wanted to use tons. As you can see on this diagram, there are pulpwood prices. This happens to be 2024, but on the Maine Forest Service website, there are many, many years involved, and you can go way back. But generally speaking, it's valuing that timber, coming up with a value, and taking a peek and see what's left after you subtract that from the total price. And you may have to be doing a little tweaking. I hate to put it so bluntly, but hopefully it should make some sense if in fact you bought it from somebody who knew what they had and you had an idea of what you want. It gets a little more difficult as we're seeing in southern Maine in particular, we're seeing situations where people are buying very substantial house lots, 50, 100 acres. And all they really care about is that it's private, got trees on it, and it's somewhat accessible. Generally speaking, it might be a non-resident looking for an investment or maybe going to retire here. So that will, seriously impact their land value, because clearly, if you go through the process I described in getting or hiring somebody to do an inventory, the relationship is going to be dramatically different. The land value is going to be significantly higher than $200 per acre. Historically, timberland, bare land prices have been, in middle of the state, $100 and $200 an acre. And that was through a process of coming up with the value of the timber and subtracting it from the total price paid. I regret, or I'm sorry that this sounds like a big guessing game, but part of this is that. And unless you have an appraisal, a forester doing the value of standing timber currently and back at the time you bought it. So I'm going to go back. I guess I'm not. What I really wanted to show you, getting back to this form, is that what you've seen is and I'm apologizing here, although I don't think I'm as well prepared as I should have been. What I've been showing you is a timber sale where you're selling the standing timber, selling the stumpage, as opposed to hiring somebody to sell this timber for you, for instance. So that what you end up having is the sale of standing timber, but you also have to report if you got a 1099 from a mill, that this person, the consulting forester, sold this wood for you to a mill. You end up getting a 1099 for substantially more value than the value of the standing timber. So what you end up having is this number right here, which is the sale of this could technically be a hypothetical sale of standing timber, and then you would have had a gross sales price over here from the mill, and you'd have to the difference between that gross sales price and the hypothetical standing timber price would be treated as ordinary income. Otherwise, this also would have been a hypothetical sales price based on those timber prices, and if this was $50,000, and you would take this $50,000 minus the $5,000 capital gain, and your ordinary gain would be $44,000, taxed at a much different rate. So I kind of improvised on the fly here, but it's showing you that depending on the nature of the sale, traditional timber stumpage sales would appear here. But if you had actually sold everything, and of course you would also be able to deduct, let's just say you paid 8,000 for a forester, then going back here, we would also subtract the cost of the forester, and that would be our um, ordinary income. So I don't know how many of you go ahead and Jim Kelly.
So, as a consulting forester, almost all of my sales are lump sum.
Yeah. Where are you from?
In Western Mass, but I have a piece of property in Mount Vernon.
Oh, I live next door. Okay. Um, so
So as a lump sum, timber accounting and also in Western Mass here, as you were saying, the land values for large house lots are
Yeah.
where the money is.
yeah, I mean,
And in my own personal case, I'm on property that my parents bought in the 1950s
yeah,
with a cost basis of like zero.
yeah,
And the trees that I'm cutting on my own property have all grown since I'm 72 in my
yeah,
lifetime. So
yeah.
I get cost
Well,
basis of zero.
Well, did you inherit it? Or was
Yes.
it?
Yes.
So if you inherited it,
It was gifted. Gifted.
oh, it was a gift. Okay.
Yeah.
So
Yeah.
forget it. You're,
Yeah.
and I'm not going to ask you to divulge what your income is, but as I said earlier, the capital gains exclusion, I don't know whether you file singly or file jointly, but that capital gains exclusion is what you're going to have to rely on any timber sale you make, so that again, any capital gain could be taxed at zero if your adjusted gross income is less than 96,000, including the capital gain if you file jointly, and half of that if you file singly. I mean, that ends up being the benefit, and your situation is not entirely unique, especially here in Maine. I see it a lot, and it's not worth, especially if the exclusion comes into play, it may not be worth at all trying to figure out some minuscule cost basis.
Right. Yeah. We've had 2 sales on the property in Mount Vernon, but it's 40 acres on Parker Pond. So the timber value is meaningless.
Yeah. Well, that, as you've seen in this discussion, absent a very detailed appraisal, fair market value appraisal, where you asked a licensed appraiser to segregate the value of the shore frontage versus the value of the rear land, and then you dealt with that. Your property tax assessment may actually do that. They might assess you at $200 a foot for all the frontage, and you could look at the rear portion of this, and it would be taxed at, I'm sure, a lot less. How they determine that is, of course, another question to be to be answered. But you might look at the local property tax assessment to see if they made some attempt to separate it. They likely would have.
We're under main tree growth, so
Oh, you're in tree growth. Okay.
yeah.
And you're in tree growth also for the non-usable frontage or for the whole thing?
For portions of the non-usable. And we
Yeah.
also have a conservation easement down
Yeah.
in Mass.
Good.
It's a restriction to Maine. It's an easement. So
Okay.
it's non-buildable as well.
Yeah. Well, good luck. If you want to talk to me sometime separately about it, I'd be happy to explore it. You've got an interesting situation, not particularly typical. So please give me a call or email me and we can. Are you making sales regularly on this?
We've done 2. I wouldn't say they're regular, but when we're up next summer, we'll invite you up for a campfire and a talk.
There you go. There you go. So, as I said earlier, I continue to apologize. I didn't prepare as well as I should have. I hope the gist of what I'm trying to explain is worthwhile. But if you come away with nothing, just realize that this is not a process that's easily accurate to 6 decimal places. You're lucky if you have it to the nearest whole number. I said it earlier, don't let trying to get it perfect get in the way of doing a good job. Some of the costs would be prohibitive to get professional assistance from somebody capable of doing the appraisal part, somebody capable of creating the kind of spreadsheets I have here. I do that. I served on the Land for Maine's Future Board for 10 years and have a pretty comfortable feel for market values. And like I said, 31 years with the IRS and 10 years of consulting. So you're welcome to contact me. I'll be in South Carolina for a couple of weeks starting next week, but I am available. And you can get more details through Maine Woodlands or through the information that she put up for me. Let me, I want to share, I want to go back to my PowerPoint. I showed some prices here. Are you seeing it?
Yes,
Historic stumpage prices?
yes.
Okay. So there's a lot of information out there going way back that can assist in this process. I use it quite regularly because it's not something I generated. It's something the Maine Forest did. As I said earlier, this slide, that if you're doing that simplified approach of just a comparison of a price back in 1985 versus when you sell it, you kind of have to show that you made very few, if any, harvests, and that it makes sense. And as I said earlier, timbertax.org website it's got a lot of information there, including this handbook. It does have some U.S. Forest Service examples. I would give it a shot, but and lastly, just remember that the capital gains exclusion provision. It could save you a lot of time, weighing whether you want to spend a lot of money or spend a lot of time determining your cost basis. Does anybody have anything else they'd like to ask? How about you, Joe? Are you have anything you'd like to ask? I'm looking at a picture of a gentleman who looks a lot like me in the picture. Well, in that case, good luck. And like I said, I will take some phone calls, especially if it doesn't take a lot of time, and I can point you in the right directions and so forth. Okay. With that, I'll sign off, and as I said, good luck with your endeavors.
Thank you
Bye
so
now.
much.
Thank you.
Okay. Bye.
Bye.
Thank you. Bye-bye.
Thanks, Jim. Bye.
All right. I'm seeing a few faces here still. Nice.
Trying to leave.
Oh my gosh, Steve Verrill. Ooh. I think that's a fraternity brother of mine. Okay. Nice to talk with you guys, especially you, Jim. I'll hold you to.
Hey, Jim, can you hear me?
I can hear. Is that Steve Verrill I know?
It is. It is. And I've
been
got,
a while, Steve.
I guess, 50 years at least.
Gosh. Yeah. The only
to
contact
see
we
you.
seem to have now is loss of fraternity brothers. I'm sorry to
Yeah,
say.
that's the thing. Nothing to look forward to there. But yeah, yeah. This is kind of a mess for me because I didn't get a 1099 from my forester. It's probably too late to get one from him now because it's past the time to file them. But I've got the value. The problem is I got a farm income and turbo.
I'm a little. Hey,
Yeah, go ahead.
Steve, email me after this. You saw the
Okay.
email, and I'll give you my phone number, and I'll chat with you.
Okay. All right.
Okay. See you. Nice talk.
We'll see you.